We're talking about serious stuff, people, regulation. And we've got an amazing team, very incredible humans that are talking to each other. This is my amazing panel. Okay, so you have to understand that we have 2 centralized exchanges, a government official and a regulator. Woo-hoo! So this is the most important panel of the day, you have to admit. So, Nolwazi, just introduce yourself.
All right, thank you, Monica. Hello, everyone. It's great to be here. My name is Nolwazi. I'm with the Financial Sector Conduct Authority. We're based in Pretoria. And I'm a senior specialist within our Fintech department. And I'm so happy to be with you all.
Thank you so much. Hi, everyone. Good afternoon. Lovely to be here with you all this evening. My name is Cayla Murray. So essentially, I'm a member of Provincial Parliament here in the Western Cape. And I have the great privilege of being the Standing Committee Chair for Finance, Economic Opportunities and Tourism in the Western Cape.
Welcome.
Hello, everyone. I'm Badi, Sudhakaran. I'm the co-founder and CPO for Valor.com. Valor is a crypto exchange based in South Africa. We are the largest exchange in Africa in terms of trading volume. We serve more than 500,000 customers, corporates in about a few thousand corporates. I mean, actually a little bit over 1,000 corporates. What else can I say? We are a small company, started in 2018. We raised a $50 million Series B round last year. We're launching crypto-native products. We are going global. And ultimately, we feel like crypto is a unifying force for good. We want it to be a unifying force for good. And we want to serve as many customers in the world as possible.
Thanks, Badi. My name is Christo. I'm the country manager for South Africa for Luno. For those of you who've not heard of Luno, I think we're the oldest exchange in South Africa. We might not be the biggest exchange headquartered in South Africa, but we do boast 4 million retail customers. Yeah, thanks, Monica.
Welcome, everybody. So you have to understand that this is a very powerful panel. Why? Because we have lots of questions to ask the regulators. But I want first Cayla to tell a lovely story that is going to depress you, very depressing story. Okay, so what happened is that in 2018, my name is Monica Singer. I work for ConsenSys. ConsenSys is the company that invented MetaMask. Download it for free, use it, best wallet ever. Okay, fine, that's the advert. Okay, so Cayla, so what happened in 2017, 2018, ConsenSys worked with the government in South Africa to promote the blockchain technology for the system of tenders. So imagine putting the tenders in the blockchain, so then you'll know transparently who's getting what and who's paying for what. Then we gave them a proposal to put the asset register of the assets of the government in the blockchain. And everything was going to be paid by an outside party, so it wouldn't even cost money to the government. And we presented everything to the government, and it failed. Now, I come to Cayla, who is all bushy-eyed and whatever you call this thing, that she wants to now change the world. I gave her the paper. I said, let's see if your provincial initiatives can achieve what I couldn't achieve at national level. Tell us a story.
Thank you, Monica. So yes, bright-eyed, bushy-tailed, Monica gave me the behemoth task of essentially taking her paper, going to my counterparts at provincial government and suggesting that we use blockchain for treasury supply chain mechanisms. And of course, I was met with the answer, are you mad? We are still working on legacy systems. How the hell do you think this is going to work? So I learned a lot from that experience. Thank you. But I think it's also helped to guide me in my steps going forward. And one thing that I've really learned from it is that blockchain is quite a scary word to government officials. And I think Nolwazi will agree with me on that. Just the word in itself, it creates this sense of well, maybe this is crime, maybe this is corruption, maybe this is scandal, and people tend to steer away from it. So really, I think the important thing that we need to do, whether as regulators or as business, is try to firstly demystify it and start simple. So what is that one key area that we need to focus on, that we need to make a change so that it can start, planting that seed so that we can have further adoption.
So, Cayla, what are you doing about this?
Thank you. You're putting me on the spot a lot today. So Gideon is sitting in the front over there, and he has actually been quite helpful in this regard. We have been looking at creating a white paper on regulating crypto asset service providers. My involvement in this is essentially one as a lawmaker. So what we're looking at doing is trying to find the balance between protecting the consumer, but on the other hand, also not stifling this new emerging industry of crypto. And it's still very much in its formative phase. We're still trying to get it through the policy process, but I'm sure you can ask Gideon a lot more detail on this. We hope to have some public participation and eventually get it through as a private member's bill. Nolwazi and I have also been talking a lot about this, and of course she's also been doing a lot of work in her capacity in terms of working with the IFWG. So perhaps I can just shuffle the attention away from me.
Nolwazi, tell us what you're doing. Oh, you're ducking this one, Cayla.
Thank you, Cayla. So yes, I've been doing quite a bit of work with the IFWG, and we have been doing extensive work on crypto assets. So that IFWG, if you don't know, is the Intergovernmental Fintech Working Group, a collaboration of the South African financial sector regulators. And we come together to work on the three innovation facilitators under the IFWG, which is our regulatory guidance unit, the regulatory sandbox, and our innovation facilitator. So under the three auspices of our innovation accelerator, we do our work on crypto assets, where we've been conducting quite a bit of research. We'll soon be publishing our crypto asset study for South Africa. And we've also got our main umbrella overseeing working group that oversees the work that we publish under the IFWG, which is our Crypto Asset Regulation Working Group. So under the Crypto Asset Regulation Working Group, we do conduct our work together as all the regulators, where we generally meet regularly to discuss under this auspice how we are each conducting work under crypto asset regulation. So this is not to say that under the declaration of crypto assets as a financial product by the FSCA, where I'm currently working, that this declaration means that only the FSCA gets to regulate crypto asset service providers. So where we license, where FSPs have to apply for a license to provide the financial product, which is a crypto asset. But that means that we provide the conduct regulation as a market conduct regulator. And then you have the Reserve Bank also giving their own regulations, where they have issued exchange control regulations, where, as we know, you cannot issue a crypto asset from South Africa outside the borders. And then we have the Financial Intelligence Center that has provided their own AML-CFT requirements regarding crypto assets. However, we see that one key aspect of regulation that is still lacking for crypto assets is prudential regulation. And I think this goes to answer one of your questions, Monica, around why are banks a bit cautious to collaborate or work with crypto asset service providers? Because some of them are, we think they're still waiting to see what's going on in the market, or still waiting to see how regulation will play out. The Reserve Bank mostly regulates or supervises banks under watching for prudential, regulates them under prudential regulation to see and to ensure that the financial system stays stable. So how can they engage or expose themselves to a lot of risk to new providers or a new system under the crypto asset service providers if there's no proven track record under prudential regulation for them, which has not been issued yet. So, we look at this from a well-rounded, or we want to see it from a holistic point of view. And this ties in well, though, if we go back to the consumer protection aspect of what Cayla was saying, that from the FSCA, we do focus on consumer protection and your crypto asset service providers. How are we protecting them in the forms of advertising, fraud, in where consumers might invest in fake crypto asset scams or fake crypto asset, invest here and I'll give you your money back with a 100% interest. I mean, sometimes when something sounds too good to be true, it really is. But people fall for these scams. And so we need to protect them in terms of financial literacy and digital literacy campaigns, which, yes, regulators are spearheading, but also the financial services providers that are licensed to issue crypto assets as products also need to be a part of. So let me pause there. Monica knows I talk a lot. But
Nothing wrong with that.
This is also in line with what Cayla was saying.
I agree.
Thank
you. Now, Badi, just tell us what Valar's stand is on regulation. Because, you know, what happened with Binance, you know, you don't want to repeat that. And I always think, personally, when Satoshi invented Bitcoin, he created an idea to prevent corruption and fraud. So why do people think that they can get away with it? Because this technology is super transparent, and therefore you can't get away. Eventually, it's going to come back to haunt you. So I'm sure, Valar, I know Vazam and your value system super strong. I know that you guys from the beginning committed to being in line with transparency and the spirit of why this was created. Tell us a little bit more what you guys are doing.
Thanks, Monica. I think the first thing to think about when it comes to regulation is why. To answer the question, why do we need regulation? And the second question is, what are we regulating? And then the last thing is the least important of it all, is how do we regulate? So from the regulator's perspective, I understand that why is, yes, consumer protection. And some of the other regulators have other mandates, things like currency value protection. So every regulator has their mandate, but at the center of it all is consumer protection. But if you think about regulators as a parent and finance as the child, you know, the regulation when like a parent's rules and regulation when the child is a baby is not going to be the same when the child is a teenager or when the child is an adult, right? So you can't tell your teenage son that he has to be drinking milk all his life, right? So I think the regulations need to think about where finance is moving and how technology is taking forward. So regulations that made sense for a cash-based system doesn't make sense for a digital ecosystem. And when it comes to crypto, it's an asset that's it's global in nature. It's an onshore asset and an offshore asset at the same time. So how do we regulate this new system? Are we going to use regulations that were 20, 30 years old and try to apply the same kind of rules? It's like saying, yes, teenage son, you have to drink milk, right? So our stance with regulation is that we welcome regulation. In fact, when we started Vala, there was no regulatory framework, but we decided that we want to be self-regulated. So we KYC'd every single customer. We verified their identity before they even put a penny into our system. So now that we are in a state of regulatory framework that the regulators have come up with, so the important thing is, how do we create a responsible framework with a new technology that's borderless in nature and still achieve consumer protection and continue innovation and allow people in this country and in general in the world to be equal participants in global commerce. Because when you think about Africa, we are already starting on the back foot when it comes to the developed world, right? The developed world, when there is no exchange control and things like that, everybody is an equal participant in the global commerce. But right now in Africa, the old regime of you cannot, in order to get to be a participant, you have to go through hoops and paperwork and then permissions and things like that. So really the regulators as a parent have to reflect on how do we serve our people best with new technologies, at the same time protects our consumers. So that is my stance, and at Valor, we welcome regulation. We want to protect customers. We will want to continue providing a service with this new technology that we want, as I said, to be a unifying force for good in the world.
Have you registered with the FSCA?
Yes, we were one of the first ones to apply for the license.
Well done,
yes,
well
we
done,
did, yeah.
well done. Your turn.
And we are eagerly awaiting the announcement of our license.
Oh, good. So, Christo, you're saying you registered? And tell us about your commitment to regulation and a good market.
I think, in general, when the word regulation is mentioned, in the industry of cryptocurrency and Web3, it's a bit of a contentious issue. But I think the important thing that we've pointed out, and even at Luno, our commitment to always being above board and, complying with the regulation has been at the heart of our ethos and our operations. If I just look back at our journey, even before there was any regulatory framework or any guidance from the regulators in South Africa, Luno, we voluntarily registered at the FIX. So we've always taken an approach where we have to be above board, we have to tread the line, and we need to do that not only to protect the industry and fight for this industry, but also to protect our customers. And I think that's often where there's a misconception that players in this industry are not necessarily having that in mind, and that we're not necessarily pro-regulation. What is important to consider here, I think, is what is being regulated, how that's being regulated, and how that's being implemented. So when we look at it from a South African context, in respect to not only Africa but globally, we are leap years ahead when it comes to that regulatory framework. I think with crypto assets being declared a financial product in October last year, that was such a significant watershed moment for the industry, and it creates such clarity on what is needed for this industry to become not necessarily above board, but to comply and make it safe for everybody to facilitate and operate in this space. And what I think is really important is that companies like Luno and Valo, who we really drive this industry in South Africa, is that we work closely with the regulators, not only to protect consumers, but we also have a responsibility to educate the regulators on what this novel industry is, what it is about, so that they can enrich their knowledge to have the right framework to apply the right regulation.
Agree. Because you know what, the elephant in the room, I'm going to be blunt, but in general, we don't trust the regulators because we think, do they really know what the hell they're doing? So just enlighten all of us. Why should we trust you? Why? Okay.
That is a very loaded question, Monica.
It's what the elephant in the room,
Why should you trust us?
Why?
I don't want to pretend to speak for all regulators. But I think, with every regulator, if you go to their website, their mandate is clear. And you see there, or the objectives of that regulator are clear. This is why we are. This is why we function. And sometimes, yes, time is against us, but that is because you need to understand how the process functions. If most regulators will have some form of innovation or fintech department, because you find that most of us now have a market development mandate, or we support innovation, because regulators have understood that innovation is inevitable. We cannot run away from it. These technologies are evolving exponentially, and it is to our detriment to try hide our head under the sand. and it is to the consumer's detriment as well. And so in every aspect or in every lens that you look at regulation from, it is to protect the consumer, the prudential lens, the AML CFT lens, the lens from SARS collecting tax, the competition aspect, because you ultimately want to protect the consumer. I'm not advocating that. It doesn't mean that because our actions are slow, you can't trust us. But there is a process. For example, when we conduct research from the Fintech department, it's not that we are not keeping up with innovations. An example, I am currently conducting research right now on decentralized finance, which will in some end inform the regulation that will be in place for South Africa. But that process is not as easy as I finish my research and suddenly there's a regulatory framework in place for the country in 2 months, because that research needs to be conducted and then move on to the regulatory frameworks department, and then from there it has to then move on to be drafted into some form of regulatory framework that goes into being a bill before it moves on to parliament. And then on the outside, oh my goodness, regulation is so slow. And it doesn't keep up with innovation. But on the inside, we are working as hard as we can to try and keep up with innovation. But the process is because we need to go through so many steps. So then it seems that we are untrustworthy. I think perhaps maybe an awareness campaign needs to be had so that people understand how the law functions, to finally get that law out, because I hope most of you are aware of the Kofi bill and that you've read it. But the Kofi bill has been a bill for some time. I hope you've all realized this before it will become an act. That's an example of the fact that we want to be able to protect our consumers through the Kofi bill, but this is taking time. So it's not that regulators, maybe there are some bad apples as there are in every industry. I don't want to try to act like we're all innocent, but to give an example, that's just an example, that there is definitely a lot of work at hand to try and balance regulation with innovation, to try work with innovators. An example I can give is with the DeFi research I'm conducting. I have collaborated with a lot of fintechs, Luno being one, having interviews with them to try and get an informed perspective from the fintechs on the ground, because I do not pretend to know how these fintechs are providing their services, so that I can write research that's purely theoretical. So there's industry collaboration. With our research on open finance, we ask for industry comments. We do not work outside of industry. And so there's a lot of industry collaboration to try and ensure that we gain industry trust. There are a lot of examples of this from other regulators as well. We are not the only example of a regulator that does that. Perhaps maybe you feel like they haven't consulted your institution, and one experience I've had is if you reach out to them, they will and would like to engage with you. Maybe the thought or the wall that's been set is that regulators are a wall and don't want to engage, but the reason why the IFWG exists is to engage more with fintechs. The Regulatory Guidance Unit is there to answer any questions you have on regulatory questions you may have. If you have some uncertainty or you need clarity on regulations you need to comply with as a fintech, that's why the Regulatory Guidance Unit exists. The sandbox exists for you to test any innovation you have, to test innovations you may have. And the Innovation Accelerator exists so that we can publish research that's relevant and up to date on innovations that are happening on the ground that may be relevant to any fintechs in the space. So we have quite a lot of collaborative tools, and we expect the fintechs to speak honestly with us. We are all people. Thank you.
Thank you. So, Cayla, I've got a question. This is the Internet of Value. That means, how do you learn about it? By using it. You know, it's like when the Internet came out, you didn't teach people, oh, do you know about TCP/IP? You said to them, here's a laptop, here's a computer, just send an email. So the question is, you guys are writing legislation. Have any of you bought any crypto lately? No? Isn't that like the question? Buy crypto, 100 Rand. Learn how to use the wallet. Learn the DeFi protocols. Have you done that before you write the law? You have? Tell us about it.
Okay, so my first time, I went to a project in Mossel Bay. It's an amazing project if you guys ever get the opportunity. It's called Kasi Cash. And they use a Lightning wallet. I can't remember the name of it exactly, which I had to download. And then they sent me some cash. And then I could go to different spaza shops in the community or the township. And I could buy some knickknacks. And there were a whole bunch of kids that joined us, which was amazing because essentially these kids were a part of the surfing school that served the underprivileged kids in the community. And at the same time, they had established a learning center in Mossel Bay, or in that township, where they taught the kids about Web3, where they taught them about how to use blockchain, how to use crypto, so that essentially we're not leaving behind the most vulnerable in our society. And I actually think that's a very important discussion that we do need to touch on today, because we're talking about Africa right now. We're not talking about America. We're not talking about the EU. We're talking about a continent where there is massive divide. You have the haves who live in this kind of place in Africa, and then you have the have-nots, who are these kids from these townships who get this once-in-a-lifetime opportunity and who get to teach old people like me, to them, I'm an old person, how to use my cell phone in order to spend the money, the sats that I have, to buy them some knickknacks. And it was a wonderful experience, a really eye-opening experience. I think just the conversation that we were having earlier was quite interesting, the conversation about the regulator. And I said to Nolwazi, don't you think that sometimes this word regulator gets used as a swear word? And you touched on that as well, because you talked about how a lot of people don't like regulators. And I think there's also something that we need to do in this ecosystem that we're all a part of, from the FSCA to Luno to me as a politician and to everyone here who's just very interested in crypto. We need to understand what each of our roles are and what we can do to help one another. So I am not a regulator, I'm sorry. But I am an official within government. I'm an elected representative. And as an elected representative, people who form part of constituencies, so this could be a constituency involved in, for example, crypto, can approach me, talk to me about their issues. And from there, I can do things like lobby for a bill in national parliament, which we're doing. Or I can use my contacts to help put you in contact with people like Nolwazi. But it's important to remember that government has different spheres. And I'm not going to go into a whole politics lecture right now, but I think it's important to understand this quite clearly. What entities like regulators do is they're an independent body, and they're independent for a very important reason. That's because we don't want them to be corrupted. We do not want the executive to interfere with what the regulator does, because if they do, that can lead to economic chaos. And so it's important that we work with them and ensure that they can play their part in protecting the consumer. But on the other hand, and we've touched on this a number of times, it is really, really important that we don't stifle the growth that we're seeing. There's so many jobs, there's so much innovation, there's so much creativity, like I saw in Mossel Bay. And I think I've completely pivoted from your question. So thank you.
Well done, Cayla. Well, now everybody knows who to lobby when you want to lobby someone, okay? Here's the woman. Woo-hoo. Okay, now the elephant in the room. I love asking those questions. Christo, tell us about, people are asking questions about your holding company and the scandals of TCG, blah, blah, blah. Tell us about it. Does it affect you?
So I think what is important to note is that DCG is the parent company of Luno, but Luno is an independent, wholly owned subsidiary. So We operate completely independent from our holding company. And I don't think the word scandal is right in this context. There's ongoing concerns in the US that is being played out in the courts in the US, but it doesn't impact Luno directly in South Africa or in any of the other markets that we operate in. And yeah, I think that pretty much kind of sums up the relationship. But I think the key takeaway is, even if our parent company is being mentioned in the news and there's ongoing developments on the US side, Luno as an entity in South Africa or in the UK or in any of our other markets such as Malaysia or Nigeria, we're completely independently owned and we operate independent from our parent company.
Okay. It's good to know. Now, the other one that I'm sure everybody wants to know is the dirty word, exchange controls. You know, we hate exchange controls, let's be honest. Okay, be blunt. Okay, now, question. Badi, has exchange control affected you in your business at all?
Well, first of all, I just have to say that we are very fortunate in South Africa because the regulators have taken a balanced approach. Unlike even our neighbors in the African continent, where there have been attempts to ban crypto. And even in countries like India, where the regulators and the government are going after the industry and saying, okay, no more crypto in this country. But given that reality in the world, we in South Africa are quite fortunate. And the fact that South Africa is the first country to have a regulatory framework is also very welcoming. And you can see here that we have a thriving crypto ecosystem, lots and lots of projects, promising projects that are coming out of South Africa. So we're very fortunate. So in light of that, it is a very, very difficult task that the regulators have because exchange control exists and has existed for decades. And how do you reconcile this archaic rule? And it's not easy to change because it's a big ship, right? It's not easy to change direction. So we have to look at what are the regulators faced with. They have exchange control, and we have crypto assets. So if you look at the whole world and see which countries have actually come out with licensing framework the fastest are the countries where there are no exchange control, because crypto as an asset is, as I said, onshore and offshore. So, and if there's free flow of money in and out of the country, then there is no problem licensing crypto asset service providers. But in Africa and in South Africa, because the mandate is protect the value of the currency, it becomes really hard. And to compound the problem, to protect the value of the currency, it seems like keeping the money in, it seems to be the only key that the regulator might be utilizing to protect the value of the currency. And despite that, we aren't seeing the value of the currency being protected. So overall, it's a really hard problem. It's not as easy as get rid of exchange control. So I congratulate the regulators trying to figure out a way to accept crypto asset service providers here. But I do think in a world where we are interconnected, in a world where we're not thinking borders when we are sending WhatsApp or email and making WhatsApp calls. But why should we be thinking about borders when you're exchanging value? So it is a problematic rule, but again, it's a hard problem for the regulators to solve.
Nolwazi, do you want to answer this? What's the thinking? Yes, no? You can say pass.
I have a few points. So I think some of the reasons for the exchange controls, yes, monetary sovereignty is a significant worry, but there's also other linkages to protecting, or rather having these exchange controls, because from monetary sovereignty flows other significant risks. You find that if we don't have these exchange controls, more and more people will buy into the crypto assets. And there's nothing wrong with that. Great to thrive in crypto asset industry. However, monetary policy in the country will be less and less effective. if more and more people are buying more crypto assets, less and less people will be using the rand. And if the Reserve Bank says we are decreasing interest rates by 25 basis points, we will not see, it will not see the impact it's trying to have. So imagine if inflation is high and they're trying to take down inflation. Interest rates will end up rising more than they should, and you will see people being less and less and increasingly less to meet their debt obligations, and there will be a problem in the economy. If people are buying more and more into crypto to send the money out of the country, we'll see more financial stability probability or increased probability of financial stability challenges as well. There will be, yes, increased interconnectedness globally, but also crypto assets, the crypto asset market especially will result in an increased DeFi ecosystem as well in the country most likely. DeFi functions on high leverages of crypto assets. This will also increase this results in an increase in the interlinkages to the traditional financial system. If the DeFi protocols fail, perhaps the smart contracts are not programmed correctly, this will lead to financial stability challenges in the economy, which South Africa just cannot afford. So these are challenges or risks that would be catastrophic to the country and result in contagion potentially to, if not the CMA, I mean, I consider CMA because I am from Eswatini, if not the CMA, SADC. And this is, it seems like a small rule that is an inconvenience, but on a larger scale, South Africa is one of the largest economies in Africa. And so it cannot afford these significant risks materializing.
Thank you. You know, changing subjects, and that applies, my question applies to all of you. I see a lot of scams, and what really gets to me is that Satoshi created this so that we would not trust an intermediary. And most of these scams is that we are trusting the crooks. So the question is to the regulators and to you guys, the centralized exchanges, shouldn't you take a little bit more of a proactive approach to maybe have adverts, educational sessions, to say to people, don't trust intermediaries, you don't know who they are, why would you give them your money? Have you asked questions? Are they regulated? Do you know who they are? Would they not run away with your private keys? Blah, blah, blah. What are you all doing about stopping all these scams? And South Africa has been rife with scams. I don't know why we fall for it. There's something in our psyche that doesn't make any sense to me. So what are you doing?
I think there's quite a few things that needs to be unpacked, but education is very important. And at Luno, it's always been a cornerstone of what we do and how we drive awareness. You know, in the introductions I mentioned, we were one of the first exchanges, or the first exchange in South Africa that offered an on-ramp in ZAR. And from that time, where we were still called Bitex in 2013, we've been driving education. We've been educating the public on not only Bitcoin, but on cryptocurrency. Scam prevalence in the crypto industry is rife. That's true. They're using centralized exchanges. Scammers are using centralized exchanges as the vehicle to drive these scams. But I think it is important that not only the centralized exchanges, regulators, lawmakers, government, there's a whole collective in the financial industry that needs to drive awareness on financial safety and security. I don't think the onus can rest upon one entity, only one exchange or one regulator. It needs to be a collective effort. It needs to be imprinted in at the fundamental level, at an educational level, where financial education is driven. How to set yourself up, how to protect yourself. I mean, in an economy such as South Africa, where there is a lot of crime, there is a lot of financial crime going on, the onus always rests on the customer, on the consumer, to protect themselves. And with any advert, any communication, any public-facing messaging that we do, I think it is important to not only have a risk warning, but also make it clear that not to trust anyone that promises you a return that is far too good to be true, and only trust yourself with your financial well-being, right? And I think that is very important. And I think as an industry, as a collective, both Luno and Vala, that we've done quite a lot to drive that education and awareness. But I think the same applies to the banks. There are still loads of scams being driven through the banks, through SMSs. So it's not a crypto problem, it's an industry problem, and the education comes down to that fundamental level of educating yourself on financial awareness, but also I think on a government point of view that the regulators and government needs to play a bigger role in driving better financial awareness at a fundamental education or basic education level.
And also, let's be honest, don't you have like a department that is there to detect, in a proactive way, if there's something funny going on, to go and investigate? No? Be proactive about preventing. I don't know if that's possible. I don't know, Badi, tell us what you guys are doing to educate and prevent and detect and bring to the attention if something smells funny. Like, I'm sure you can smell a rat when someone phones you and you can see it's a scam. Shouldn't you phone the regulator and say, whoa, I don't know. Do you understand?
Yeah.
We need to be more conscious of preventing this.
Yeah, so whenever there's a financial product, there unfortunately are fraudsters and scammers. Crypto is the new way for scammers to defraud people, but people have been defrauding other people in various ways, banking, cash, and things like that. But the interesting thing about blockchain technology is that people who are using blockchain to scam, there's a high likelihood that you can trace those kinds of transactions. In fact, there was a news article this week that a bunch of executives were kidnapped and their crypto assets were stolen up to like $12 million or something. And pretty soon the transactions were traced on the blockchain and were able to recover those funds. But at the same time, it is a hard problem because like at Vala, we have a dedicated fraud department. We build bespoke systems internally to prevent fraud before it happens. And sometimes it's a catch-up game because the fraudsters figure out, okay, now these fraud scams are blocked before I can defraud people, so how else can I do? So you have to keep on updating your systems. Yeah. So obviously, as I said earlier, consumer protection is an equal concern for us as it is for the regulators. And that is why we are spending a lot of time and energy to try and build systems to prevent users from using our platform who are bad actors, keep the bad actors away. So that, because we want Vala to be a platform, as I said, a force for good, a new way to access these crypto assets. And we're doing everything possible to make sure that the platform's not being used for fraud.
Awesome. Cayla, what's the plan at provincial government?
All right, plan from provincial government. This is not a provincial government thing, unfortunately. But I think I just want to firstly say that in terms of dealing with the criminal aspect of it, there would be a reactive and a proactive response. Reactive, report the crime. You have to report the crime. Otherwise, SAPs won't have that information and they won't be able to prepare themselves for the resources needed to respond. Then reactive. I mean, SARS plays a very, very important role here. They have recently integrated with something called the Border Management Authority. So now if you ever go to the airport, you'll see that you actually have to declare all of your items before you get on the plane. That's going to actually become law to the extent that you have to do it. Otherwise, you could be charged a penalty. And that isn't just to take your money. The reason for that is so that we can securely monitor the movement of people in and out of our country and prevent crime. You asked me what we're doing at a provincial level. I, as a provincial member of parliament, can't unfortunately create that legislation. So what I'm doing as a lawmaker who's interested in this space is I'm working with industry, with role players, putting together the white paper, which will then I'll hand over to my colleagues who sit on finance at national to put into a private member's bill. And in that bill, we are looking at training as a part of more awareness. But I think my fellow panelists have also touched on the importance of taking a sort of whole of society approach. So we do need to all be conscientizing ourselves, know what it is that the regulator does, what it is that the politician does, what is the responsibility of the crypto asset service provider when you go to them and you give them your custom before you get involved. And I think it's also just interesting because one of the things that I've heard here is about corporate social responsibility. And my question is corporate social responsibility enough? How do we ensure that that corporate social responsibility actually results in meaningful awareness? And maybe just some food for thought.
Good point. Nolwazi, last words, because we're asking us to leave. And everybody's leaving. Oh, my God. Okay.
Okay. Recently, we published a statement that every financial services provider that is issuing crypto assets needs to apply for the license to issue crypto assets by the end of this month. Yes, and if they don't, they will be found guilty of an offense and can be liable for prison time or paying a fine or both. And so this is one of the ways we're trying to curb the fraud or the crime that is around all of these scams of people capturing other people, getting them, or fraud or stealing their money around crypto asset scams. I mean, it's not a net to catch all of them, but this will help with us having a good registry of the ones that are legally practicing and able to have a list to tell people that these are the good ones. And also, normally the FSCA does put out notices on we're reporting this one, or cat and mouse crypto asset provider is functioning illegally. We are closing them down, do not trade with them, and so on. So, some of the other steps we are taking, we'll follow and we'll publish those. But we are going forward and taking a necessary step, and also working on financial education and digital literacy campaigns, as we are publishing our crypto asset market study, which is written not in a level for everyone to understand, not such a high level jargony paper, so that we increase awareness in the space. Let me pause there because of our time. Thank you.
Excellent. Thank you, everybody. Time's out.